connection between China, Netflix, and Amazon?
Probably not very much. It's kind of this sentiment stuff that, believe me, being a tech expert, I'm no expert in, because I'm not a Wall Street guy like Max is. But I would say so little that whatever happened in the stock market today for companies like that is probably very short-lived, in my opinion.
Okay, Max, Wall Street guy, what do you see as the connection here? Why were tech stocks, of all things, hammered today?
So thanks for having me and Happy New Year. I'm not sure I want to wear that particular moniker of tech guy, but I suppose it's a short straw or the last guy to talk that has to be defined by everyone else. But hopefully the answers are partially redemptive here. My take on it is the following. Three different sort of streams collided today. And when you cross the streams, as we learned from Ghostbusters, not altogether good things happen. And those streams are people are selling things to book gains in 2016 that did really well in 2015. So a lot of the high flyers of last year, as per your comment, were sold off today, tax rebasing, and you sort of get away with giving yourself a 365-day loan from Uncle Sam on the tax bill. That happened. Additionally, anything that causes greater loss of confidence in China data sends shockwaves. We've also seen the Chinese market get propped up through all kinds of various and sundry, and there's now the sort of roll-off of the lockup on preventing shorting, which is always bad, China news-wise. I think the market was generally a bit overbought. The reason I do think it does actually matter for the world that maybe everybody else is more traditionally interested in hearing us talk about here on Bloomberg West is I do think the pre-IPO tech names, the private names, are affected because the multiples they have right now are probably too high as against their public peers, and that discrepancy gets larger on days like this when we see some contraction in the multiple on the public names, especially when high-flying winners get sold off as aggressively as they did today.
Well, and interestingly, some of the more recently public technology companies like Atlassian, Pure Storage, they were the biggest losers, though low volume there. David, what about the fundamentals of these companies? Do you see strong fundamentals when it comes to smaller tech companies like Atlassian and Pure Storage that we're looking at, and also Amazon,
Well,
Netflix?
I think, generalizing about tech is a very hard thing to do given the scale of the industry and its weight in the economy now. I think for internet companies that dropped a lot today, like Amazon, Google, or Salesforce, I don't think what happened in China has any relevance. I think a company like Atlassian, possibly, it's new in the marketplace. It's a company that is an enterprise software firm. I think it's possible, if Chinese economy really slows down and the global economy slows down, maybe. But I don't see a whole lot of sign that what's happening in China is a global contagion yet. I don't think that's what we're saying here. So it's nothing to do with China. It's to do with sentiment. It's to do with, I think Max is very sage in talking about tax-related reasons. And I think it's also a really smart point that he made, that this could have a negative effect on some of these wildly overvalued private companies.
So, Max, let's dive into that a little bit. Is this just one bad day, or is this the start of what could be a not-so-great year?
Yeah, so I think it was just one bad day. I think that the sort of troubled year began in August. So I think we're having a kind of discussion in tech now, which just shows us how much momentum and excitement there is around tech, how bright the future is, and how a little bit out to lunch tech kind of sometimes is in terms of macro trend. And that being that I think the risk off after many, many years of risk on really began around September. So we're actually pushing half a year into that process. So I do think that we're going to need to see more fundamental performance from our pre-IPO and post-IPO tech companies. We're going to see a more skeptical lens focused in on the space, but it's still going to grow. It's still going to be a great space, but it's not going to be a sort of suspension of gravity, which we've seen a little bit lately. I think that started a while ago. I think days like today are reminders of that, but really only symbolically, because I do agree that today is just sort of a day that people are kind of vomiting up some risk they've put on maybe over several years. And I'd offer as proof companies that are excluded from China, like Amazon and Alphabet or Google, underperformed companies that are actually in China. It's kind of hard to make the argument that if you're not invited to the China party, you're particularly adversely affected by some trouble in the China party.
Well, and of course, it'll be interesting to see what measures the Chinese government takes this year to prop up the economy.